to you here on Wednesday, April 23rd, 2025. I want to take a minute and just kind of show you how we did today on one of our plays. But I think more importantly is not so much how we did as to recognizing the type of day that actually started out. And we'll take a look at the SPY. And I mentioned to the room members that, look, this size of a gap in the morning, you have to think about fear and greed, that there will be so many people taking profits that the prices will probably fall. They managed to barely take out the high over a 45-minute time period. But then at that point, once they broke the open line, convincingly, it was just nothing but several dollar move down. We actually had about a $9, $10 move lower. The Dow was up about probably 1,100 points, give or take. And here about 330, it's about 380. So you can see we took about an 800-point negative swing. So if you wonder why some of your stocks are pulling back, is that not many stocks can hold an 800-point swing. To that fact, you can't hold a 2-point negative gap on negative NASDAQ, because we were over 4%. Now we're 2.3. So these are why the market's pulling back. There was some news on China and the U.S. talks today. So I had the room members hold back. So we're not going to do anything else today. Made some nice profits, and I'll share with you how we did on the screen and the type of play that we found opportunity on early. So hang tight with me, and I'll get that going. So once again, as we gapped up quite a bit higher here, you can see we took 4 contracts of the April 23rd 0 DT 55.40s on a 10 wide bear call credit spread with a 55.60 with a 396, kind of small. So I'll bring it up here, you can kind of get an idea. So what it appears. So $386 was about $392 by the time it settled out here. Again, we could have easily taken 40 contracts. That would have been $3,800. But realistically, when you trade more frequently, you want to make your frequency add up to those wins. You don't want to really go all in where you're doing 2 to 3 and maybe $4,000 risk. You may not make as much, but you're actually separating yourself so you don't go all in and get kind of all Elmer Fudd. If you have a loser, you can just take those losers with a grain of salt. So it's a nice win, but you can see convincingly how the market pulled back. This was the gap right up into this area. As a matter of fact, the high of that was 544.28. Where did the market go? 544.43. So just a little bit more than a buck, which was pretty quick this morning, right up into the 20-period moving average. Now, why is that important? Because on the midpoint, I use that as a Bollinger midpoint reference. You'll see as we bring the Bollinger Bands in. Prices typically, once they get below these Bollinger Bands, they have a hard time pressing higher. Look, every time it got near the half point, it falls. Today happened to gap over that price point, but then pulled back in. Now, again, I felt that it would do that I think it would pull back probably $12 here. Not really. I thought maybe it'd pull back to the Bollinger, not quite that far, but, market doesn't listen to me all the time. But you can see the wedge in here. We were going to break out. And sometimes these breakouts come, not necessarily breakouts as it opens flat and breaks higher. They wedge and they spring load, almost like that spring loader. When you rate that spring and you bring it down here, and each time you go down just a little bit more, the rating of that spring, the buoyancy factor, gets more significant. So what happens when you wedge in here, that it almost creates this little bit of a compression factor that just ignites the stock either higher or lower. In this case, it ignited it lower on the gap, went lower, then opened up about 80-90% plus bar and right back up to the top. If you were long or short in any type of this market here, you're not going to do well. If you're going out on the weeklies and monthly charts, lower shares, wider stops, okay, I get it. But if you're playing this more on a simple 3 to 7 day trade, good luck. We had BMY for no good reason gap against us this morning, but we also had wind gap the other direction. So we kind of made it back flat between the two, but at least we were able to counter one side of the move. You never know. These moves down that are 528 down here to 509, and then next thing you know, we're back to 545. That is not easy. I don't care how long you've been doing this. I don't care if you're Jay Powell himself, or if you are the guru in Wall Street. You're going to have a problem with this type of a market, the way we are just ambitious one way or the other. This is not a product. This is not a market off evaluation. This is not a market off of how they're looking at maybe companies wide that's driving the market up. This is a company off words, right? This is a market rather off of words. And just one day they come out and they negotiate with China and they pause the tariffs and the market goes ballistic. Next day they add the tariffs, the market comes back the same amount. So again, the words released is we are in that type of market. So you want to, in this type of market, typically stay a little bit less, maybe a lot less in your share size. Add frequency if you want, but try not to go all in. So you have to adjust. The market doesn't let you have your cake and eat it too. It just doesn't. So this is where we're going to close down here around 5:35-ish in about 20 minutes or so if we stay around this area. There are talks between the U.S. and China that could happen in the next 10 minutes. I suspect they'll wait till the market closes because that's going to create more volatility, and they just assume leave the volatility. It's already happened today. Let it go after the market and start a new fresh start in the AM, whether that's higher or lower. Ultimately, we're still in almost a primary trend line, a little bit steep here, right? We're still inside that, above that wedge now, in that side, that area. We're making $30, $40 runs like they're nothing in here. Again, think about what you would do if you closed here and you owned the SPY, for example, at 527. You gapped up here at 540. Do you think you would say, okay, come on, 560, 580? In this market, probably not. You may leave a piece for that. You got to think about what the world's doing. The world's taking profits. They're trimming their positions on a huge gap like this, where we had $17, $18 runs, over 4% in the NASDAQ up at the high today. So they're trimming their positions. And what happens when that bandwagon begins to kind of seep that in and it's not going higher or failed to break out higher, it only invites more sellers in. And so what happens as we begin to kind of pull back, you can see right in here on the 2-minute chart, you don't have to look very far, just realize that once it couldn't make these higher highs in here, right? It did actually make a little bit, just by a few pennies. At that point, if it keeps trying, it can't do it, and it struggles in here, guess what? Bids are going to back off, sellers are going to come in. Once we broke the open line right here, it was off to the races. As a matter of fact, from the open line at 540, we were straight down just a few minutes here at 534. We did climb back up to 539, but right down to 534 again, 535 area. So again, that was just once it can't go, everybody started unloading their positions in here, and that just created this free-for-all on the market tumble here. So not a bad thing. We had it still up. Here's the gap fill from here to here. So that's a good thing, but you don't ever want to take a gap block like this, and at least don't start trimming some of your positions, if not all, based on either expiration of the option or maybe how long you've been in the stock, or maybe what that individual stock profile looks like on the chart since you're supply to the left. Take it all. Don't mess around with this market because it could be up here today, tomorrow it could be down here. So don't fool around with it. Anyway, I hope this helps. Just kind of a general information on how today played out. We stayed kind of low key, as I mentioned in the room here. We were not going to partake in any plays this afternoon. We did end up taking the bear call credit spread and then another ORB credit spread in the room. But we made full profit in that. But then we had to kind of balance out the gaps that were higher and lower, wash those two out in here. But overall, kind of a decent day. But we just kind of laid low, trying to stay out of the news in here. So be careful tomorrow. I think this tension is going to continue to increase with China and U.S., and that could create more turmoil for the market. So Jeff Yates, Full Throttle Traders. See you in the room.